The RMB BER Business Confidence Index fell by a further 9 points to 39 in the third quarter. This after declining by 7 points in the previous quarter. Ettienne le Roux, Chief Economist at RMB, joins me at the desk now to unpack the numbers for us. Thanks so much, Ettienne, for your time today. Well, of course, confidence levels still deteriorating. We've lost a further 7 points to 48 in the second quarter. Now a further 9-point contraction coming through there. Your overall readings of the numbers that have come through?
Well, clearly an index level of 39 is not good news. What it basically implies is that only 4 out of every 10 of our respondents, and we survey about 1,000 of them across 5 sectors, so only 4 out of every 10 is happy with prevailing business conditions. So that tells you, give you a little bit good idea of what the business mood is out there. Should we be concerned to the extent that it's reflecting an economy that's maybe on the brink of moving into a new recession? I'm not as pessimistic as that.
Of course, there's much debate on that in terms, and that on a global scale.
Exactly. Well, just keep in mind that for our business confidence index to be consistent with a new recession, that 39 level needs to fall to as low as somewhere between 20 and 25. Now, those were the levels that prevailed in late 2008, 2009. Now, I'm not as pessimistic as that, and I don't think that our confidence will deteriorate to such an extent. Obviously, there's a risk, but I'm not as pessimistic.
So while these are numbers that are sitting at, the lowest level in over a year, the fact that, it was almost double, it's registered almost double the worst point of the recession, bringing you some comfort at this stage of the game.
Especially if you look at a sector like manufacturing. Manufacturing also, confidence came down about 15 index points from 51 in the two previous quarters. But in the midst of the recession, confidence levels in manufacturing was as low as 11. So at the time of the recession, only 1 out of every 10 was happy with prevailing business conditions. Currently, it's still about 4 out of every 10. So once again, it needs to get really bad before this index will be consistent with a contraction in GDP.
Okay, so comfort, but a still deteriorating picture that we're looking at. It's a picture that's looking pretty bleak. So given that you've touched on manufacturing, let's hone in there and look at some of the factors that have come to bear, because in this index, in this sector specifically, we've seen confidence slipping from 51 to 36.
That's a big drop. There were some special factors. Let's not make a mistake on that. And we know that in July and August in particularly, we had lengthy industrial action, strike activity. That's never a good thing for any CEO. Right? Point number 1. Point number 2, particularly in the basic metals part of the manufacturing industry, we had a huge knock-on effect on sentiment because of the closure or the temporary closure of one of the big steel furnaces. Now, if that is a steel furnace that provides specific steel to the building industry or to the car manufacturer, you can imagine that if something like that happens, it will have a knock-on effect not only on certain manufacturers, but also the wider economy. And that is exactly what happened in the third quarter. So some special factors that to some extent can explain why we had this big drop.
That last factor that you've cited on, in terms of a special factor coming to bear in the manufacturing space, to what extent did it have a ripple effect when you're looking at the new vehicle trade business specifically? Because that's another sector that has seen a drop-off in confidence levels.
Well, indeed. I think it certainly played a role, although I do think that in the new vehicle dealership kind of industry, if you want to call it that, there were some other factors that played a role. The one thing is that it was always going to be very difficult for that particular industry to grow at 20% year-on-year rates indefinitely. So that's the first point to bear in mind. The second point to bear in mind in the new vehicle is that more and more new vehicle dealers are selling cheaper, affordable cars, of which you obviously get less profit or make less profit. Very big difference compared to selling a big imported Mercedes-Benz. A new dealer makes more money on selling that particular car than an affordable one. So from a profitability point of view, volumes may be good, but it's of cheaper cars. So it may affect the mood. And then a third factor maybe is that we could potentially be coming to the end of the replacement cycle. Now, that certainly would also dampen expectations, and it will also affect the sentiment of a new vehicle dealer.
Of course, when it comes to manufacturers specifically, we've had this set of numbers standing as a precursor, as well as the PMI numbers last week sitting as a precursor to the manufacturing numbers set to be released on Thursday. Broadly speaking, what are your expectations there, given this kind of scenario that's basically been set up?
Exactly. I think 2 things to note is that there's consistency in our results on the manufacturing side with the PMI, And both are indicative of a sector that is struggling. And fundamentally seen, there are a couple of issues that worries manufacturers. The rand is overvalued, global growth is slowing, importantly in some of our trading partners as well. Secondly, there are always cost issues. It is not talking here only about wages, I'm talking about all other costs that are certainly starting to play a role. So the manufacturing industry is struggling. I think the data that we'll see on Thursday will reflect this. Our own expectation is for a negative year-on-year number.
Yeah, well, it's not all doom and gloom. Let's take a look at two sectors that remained at the same levels, and it's the building and retail trade sectors. But we've also got to look at this, with some kind of relative perspective, because is it a case of us being at such depressed levels in the past that we haven't seen a fall off of these, indices specifically, or is it that we are seeing some stability emerge within these spaces?
Well, I think it's a combination of both. In the construction industry, well, this index has been at about 20-25 level for the last 3 years now. You need to go back to somewhere in the middle 70s to find a period on par with as bad a conditions that you're currently experiencing in that industry. There's a little bit of hope to the extent that we've seen the mood picking up a little bit amongst building contractors in the non-residential market, so the commercial space. There seems to be a lot of alterations and renovations going on in that space, and that's helping the sentiment slightly. The other sector that performed remarkably well and continues to do so is the retail sector. I mean, confidence stayed flat at about 50, so we're kind of halfway between optimists and pessimists in terms of their business mood. But it seems if you are a retailer of semi-durable goods, in other words, clothing, textiles, footwear and so forth, you're doing exceptionally well.
How much of that optimism hinging on the fact that we may well see another interest rate cut coming to the fore?
Yes, I think so. I mean, over the last 2 weeks or so, more and more speculation of that we could see interest rates coming down. Bear in mind that the survey period was 1 to 29 August, so it would have captured this changing mood in terms of future prospects for interest rates. So that certainly played a role. But I think if you look at the semi-durable part of the retail business, there's good improvement, strong improvement in business activity, sales volumes, orders, all around, not a bad performance for that particular sector.